Welcome, everyone, to another episode of the HR and Payroll 2.0 podcast. I'm Pete Tiliakis, and as always, I'm joined by the legendary Julie Fernandez. Welcome, Julie.
Thanks, Pete. Thanks so much. I'm interested to hear your setup here for our next guest, Andy.
Yeah, I'm excited to have Andy Valentine join us. Good friend of mine that I like to touch base with all the time. We catch up on the road. We catch up here and there. Going to give us a little bit of an update on what's going on in the world of cross-border money movement and FX. Welcome, Andy. Great to have you, man.
Great. Thank you very much for inviting me, Pete. Great to see you. And Julie, great to see you too. So thanks for having me and inviting me.
Yeah. We're excited to have you, man. You and I got to catch up in Wales at the CIPP event. I thought that was a great event.
Yeah.
We recorded a wonderful conversation, but I fat-fingered the recordings and somehow managed to delete that. So I'm going to apologize to you, Andy. I'm so sorry for that.
No
problem. It really was a great conversation. I wish we had it. But we're gonna try to run it back here and now we can include Julie, and we got more time, so I think it's gonna be all the better. But Julie, do you want to go ahead and do the honors here?
Absolutely, Andy. We're always interested to know how folks got into the space that they did. In your case, fintech. How did you get here, and why do you stay?
So it was actually a little bit by chance, to be honest with you. I've been in this international payments foreign exchange now for approximately 18 years. 2007. Was when I entered this world. And again, purely probably my mistake. By mistake, before that, prior to that, I was working in export. I was working for big companies working and exporting and importing. And that kind of gave me a kind of an introduction and an insight to how much moving money can actually affect the bottom line, as it were. And that's when I was asked to come for an interview, just purely out of interest, with what at the time was the University of non-bank financial companies, which was Travelex, joined a completely different world that has really still keeps intriguing me to this day, and every day is different. So, that's how I joined, and I suppose from there on, I kind of got to know and understand the ropes properly. How does financial services work? What are the restrictions, the liabilities? What is the requirements to work in this environment? And what is it that people are looking to achieve by utilizing fintechs rather than banks? And it was a very steep learning curve, but a really interesting one, which then led me on to discovering a whole new vertical within that, which is payroll.
I love it. Andy, I don't know if anybody out there is Seinfeld fans. When you said import, export, all I could think about was George Costanza. I don't even remember the episodes where he talked about being an importer, exporter, or whatever, when he would just bullshit people. But
there was quite a bit of that. I'll be honest with you. But, those days are long gone.
I'm a huge Seinfeld fan, so that one resonated. But it's funny how we talk to obviously lots of HR practitioners, and it's interesting how we all just sort of blindly find our way somewhere and bumble around and land in some wonderful spot that we're hopefully happy with. But tell me a little bit about what it's been like for you, man. I mean, obviously, did you ever see yourself getting to touch the payroll world in all this?
To be honest with you, when I first said that, absolutely not. I mean, it's probably one vertical that I just didn't even think about, to be honest with you. I mean, from my own personal needs, obviously you got paid every month, and that was my whole knowledge or extent of my knowledge when it came to payroll. Apart from if I hadn't been paid, then that's when I got to learn a little bit more about payroll, because obviously you go, where's my money? But I'll be honest with you, no, I had no idea that I'd spend the next 17 years really associated in and around payroll. But I think what happened was it just came about when we were, as a travel agency, was just looking at different verticals and just exploring different verticals just to see where our product fit could assist. And it's when we were doing some research, I came across the fact that really payroll was just underserved completely. There was the actual process of managing the payroll process was absolutely well serviced. Okay, so in terms of the gross to net calculations, working out the legal implications, working out the tax requirements within different countries, that was like within reason, pretty well laid down. But I think then that piece that is the most important piece, I think, and I would say that, but it's the last mile of actually you're not paid until you are paid and that money's in your bank, was that the process stopped there. And then what would happen is that the payroll providers were creating what are called bank files. They were creating, if they had the ability to fill in the bank files to give to their clients who decide off the payroll, they're happy with that, and say, right, this is how much people need to be paid. But that's where the payroll sort of providers' involvement stopped, because then what would happen? Those bank files would then be given to the client, You'd then have to go to the bank and go, right, Mr. Bank, please, can I use this? And at the time, file upload was pretty, in some cases, it's still being manually input. I'm showing
Oh
my age
yeah.
here, but it's still, to this day, that still happens in a lot of countries. But what would happen is that then would be left to the client to manage the finance team. And when you're managing a quite a complex process of managing payments, particularly if you've got employees across multiple countries, you may need to use multiple banks because there's not one bank that is a global bank that can facilitate money and push money everywhere. So that
Yep.
means the poor old finance department, either twice a month or once a month, are there having to put through all the pain of loading up onto bank platforms and just praying and hoping that the money will get to the employees in well, compliantly and in full and in the right currency. And that's where we found there was a real gap that in support, because the clients were frustrated at the fact that so much time and resource has been put into it, and managing that such an important sensitive payments. There is support, and not knocking banks, because we work with banks all over the world. We're actually majority owned by a bank, but is the support sometimes can be lacking. Let's put it that way.
Yeah.
So if you need urgency, and it always happens on a Friday afternoon, everyone's gone to the pub, everyone's celebrating. It's great. It's Friday. It's weekend. Let's go. That's when everything goes wrong.
Yeah.
Guaranteed you.
Yeah, absolutely, absolutely. Yeah, no, you said a lot there. I want to unpack with you because I think you're right. It's been I think back to my days, right, as a payroll leader. I mean, we've all been there, right, chasing a lost bank file, bank file that didn't get there or something didn't get processed, and yeah, it was horrible, right? It was very manual. It was very file upload and file transfers, and hoping things went through. And cross border was a pain, at least in my experience. It was very, very difficult. But what I'm finding more increasingly is it's just becoming part of payroll. The attach rates are really, really impressive for cross-border money movement now. I've been watching that happen for a good 5 or 7 years now. It's really been, CloudPay did a great job of getting way ahead of that back in the day and starting to put that in their deals. And I think now, Julie, you probably see it too. It's pretty much standard, right? Cross-border FX underpinning global payroll, at least.
Yeah, and I think also it's always B2B, but to the provider and not necessarily to the client organization. And I think that's key in some of the adoption too. It's the part that nobody thought about. And so
Yeah.
that's the part that needs to be added to the package of
It's
the
like the
payroll
plumbing.
provider. Yeah.
Yeah, I mean, when you are, a multinational organization, there's an awful lot of the web of bank accounts and managing and facilitating that opens up not only just ensuring you've got enough cash balances in those accounts, but it just shows a whole web of potential issues that again are kind of gone unseen really. So for example, just the security. I mean, if you are using multiple banks, that means people are going to have access and passwords to different types of bank platforms, you know. So there was that issue, is the risk exposure issue. There's the how do we keep this confined so that sensitive data of who's being paid what is confined to the minimal amount of people as possible? Because again, that's sensitive data that could be very easily leaked. And then there's also the different types post-transaction. There's the different types of reporting styles, et cetera, et cetera. So throw that into then if everything is working great. If it's not, you've got to track down 2 or 3 or 5 or how many lost payments or delayed payments. Could be different time zones, different
Yeah.
languages. You've got all sorts of these trials and tribulations that finance are expected to deal with, and at the same time, you've got the poor old employees that sit and going, my mortgage
Right.
has just bounced. I'm now in trouble because my direct debits have just bounced. And we're not getting any feedback or support. So I think
Yeah.
that's where we've stepped in, and other organizations have stepped in to fill that gap of, right, we're not trying to take anyone away from the bank and replace that. All we're doing is they're specializing in the delivery of something that's super sensitive. And also, legally, you have to
Yep.
ensure that people are paid on time in full as their contracted agreement is.
Right.
And
Right.
often people overlook that, so it's all very, very key to ensure that you're delivering a compliant service to ensure your clients or your partners' clients are getting paid on time.
Yeah, yeah. Just to kind of talk about a little bit about what's driving all of this, right? I mean, I've spent the last 3 years, I guess, at Money 2020, and I'm fascinated at how much we're talking embedded, right? Embedded everything, finance especially, right? Payments are embedded on demand, in real time, at your fingertips, and I think
Yeah.
that's wonderful, right? Because the little businesses are getting a better opportunity, right? Liquidity is the word I think you hear the most in this environment, and I think you see that that's a pain. That's a pain point for small businesses, but it's also a pain point for the big guys too. But I think this ability to have money in the flow of business is really, really appealing. And I love what all of the technology is bringing about. But one of the things that I find interesting in all of this, Julie, is I feel like prior to being an analyst 10 years ago, when we were working on big, especially the big enterprise deals, the idea that you were going to outsource or do anything with their treasury was off limits, right? It was out of the question for
For
float, for
sure.
other reasons. Now I find that that's changed, right? Because the pain of trying to move money around, certainly they're still conscious of that float. But do you see that? Do you see that changing as well, Julie, in line
I do.
with
I
this?
was
Or
actually wanted to ask Andy directly, how do you get to an attach rate when
yeah,
potentially the responsible owner is a treasury or finance and not the head of payroll, right?
yeah.
Oftentimes those are different stakeholders, different decision makers. So how is it that it's evolved that in fact it becomes a part of the payroll attach, services and not separate with a whole different process?
I think there's a couple of features around that. And Pete, I'm going to touch on what you've just said about the flow
Yeah.
and reserve. Payroll is one of the most costly, expensive earning business. I know it's an obvious thing to say, but it really truly
Yeah.
is. So that can sap up and hold up, and that cash flow, the longer you can keep that cash flow, obviously, the better for the business. Use that cash flow within the business for the benefit of that. Rather than it being tied up in reserves and different accounts that are non-interest bearing or they're non-operational, they're purely there to facilitate a payment out to an employee or an operation to support an in-country entity. So that is key. And that's become more and more of a focus as technology. Whereas before, when I started, everyone's going, there's no way I'm integrating any of my key financial data into any system and then linking up with another system. But hang on a second, it's too risky for us. It's far too risky. Now it's get off. I don't want anyone to touch any
Yeah.
data. I don't want any fat fingers putting and rekeying and doing anything like that. And I think that seamlessness, that flow from transparency of data that is now available, that payroll providers are giving to the treasury and CFOs, etc., are enabling them to make decisions quicker and therefore can then react and respond according to what they want to do with their flows of monies. And
Hmm.
I think then having that combination, that integration of luckily people becoming comfortable of the technology that is available. That is, don't get me wrong, there's still risk, of course, but compared to what it was like years ago, that risk has pretty much been removed. So therefore,
Yeah.
the availability to move data quickly to different parts of the business for approval has really have meant that companies are retaining cash for longer. And when you're
Mm.
dealing in countries that are buying, if it's an exotic currency, for example, you really don't want to have your money tied up in exotic currencies that,
Right.
again, highly volatile currencies that, again, you're not earning any interest on either. So you could be losing out. And what happened in the past is very often you have to pre-book and prepay for the currency. By the time you get to paying payroll, that currency has moved against you. You haven't got enough currency. So therefore, all of these factors had to be built in. And now, thankfully, with technologies and the data streams that you can get, that has been pretty much eroded now, which is great
Yeah.
news.
And Andy, just mechanically though, is there something that's changed in whose bank is used to fund some of this? And particularly since interest rates have become a big deal again. I mean, they haven't been for over a decade. They've been next to nothing. But now
Yeah.
that's not the case anymore. So are there still options? Can clients still use their own funds and have things drawn off of those through the process? Or tell me a little bit about that because it,
Yeah.
it
I
feels
mean,
like it's changing.
again, yeah, absolutely. And this is, again, another benefit of technology, in that clients pushing funds to us. That's absolutely fine. We have, like all fintechs, and I actually have to say I think it's primarily the fintechs that have really pushed the banks to develop all this technology to enable cash flow improvement, etc. But absolutely, what we're able to do now, and a lot of other organisations are able to, basically, we know when the cutoff time is for any payment. Okay, that it's required. So basically, we know how long it takes to get a payment to someone in Indonesia. We know what time it takes to get to pay to someone in Los Angeles, etc. But at the same time, you've got to be able to release those funds accordingly. Yeah. But so we know what cutoff times that are required. What we now are doing is, and and it takes sometimes some negotiation, but with approval of the Treasury and the client's banks, is we're able to directly pull the funds from the client's bank. So as soon as the transaction's been approved by the nominated approver within that organization, we're instantly pulling those funds as needed. Because the idea is that we want the clients to be able to retain the cash for as long as possible. Also, By us pulling those funds, it's less likely that A, someone forgets to press the button to push the money to us, so we miss the cutoff, people aren't paid. And the other time is that there could be a hold up somewhere along the line from a compliance perspective, or someone at a bank has not pressed the right button and it's sitting there and hasn't been pushed to us. So what we're trying to do is reduce those potential bumps in the road for us to access client funds and get required settlement amounts, but on a just-in-time basis. So therefore, the clients can retain cash within their interest-bearing accounts for longer.
Yeah.
And I think can only be a win-win for everyone.
Yeah. Yeah.
Yeah.
I heard someone say at a conference once that it's not just about treasury, it's about growth, right? Being able
Yeah,
to be
yeah,
nimble and agile. Would you
yeah.
agree with that?
I think it's absolutely. I think often some people have varying opinions on the
Yeah.
cross-border and FX. I think it's one of the hardest things for a treasury team to do is to manage the flow of currencies and actually ensure that they've got the right balances and checks and
Yeah.
checks to make sure that's fine. But at the same time, when businesses are looking for new markets, you have to take into line that those new markets could be sitting in certain countries or parts of the world where you're going to have to get used to how you manage the FX flow into that country and how you manage your FX program. Because some countries, some currencies, you can't get them back. You can't convert them back.
Right.
So
Yeah.
you want to be super, super spot on when it comes to your forecasting of what you want to buy to enable that you assure that you're covering all your requirements and that covering everyone's pay, the office rent, you name it, etc. But you're keeping the minimal amount there as possible. And I
Yeah.
think that's the key. It's getting easier to manage multiple currencies. I think it's the access, thanks to the likes of fintechs that have worked with multiple partners around the world, with multiple banks, that give you that access to liquidity and currencies that are
Mm.
volatile, and not all banks are happy to trade in and probably won't touch. So organizations like ourselves and all the others in the fintech world give companies the access that they can enter new markets. They don't need to set up a bank account straight away. We can help facilitate their ongoing
Yeah.
while they're building it for 6 months. We can help them facilitate, get them operational, get their people paid, get their bills paid if they require that,
Yeah.
etc. While they're building up their framework if with in-country bank accounts. That's if they want an in-country bank account. By working also with someone like ourselves, you don't necessarily need to have an in-country bank account if you're just, facilitating
Right.
payments to a few employees,
Yeah.
and this is also relevant in the EOR space.
That
Yeah.
feels like it was part of the initial appeal early on, when the cloud pays and others were moving into the space was, just one less thing you have to have in these
It's a
countries where you
pain.
have an employee or a minimal amount of presence. Why do you want to have to deal with bank accounts on top of that?
Yeah. Yeah.
Well, something that we've come across that I've come across an awful lot in my career is that when there's an M&A going on, there's an acquisition going on, everyone's very great. This is fantastic news. We're acquiring, we're expanding. We've been researching the Latin market there. We found that Chile, Peru, we'll be looking at Asia. We found that, the Filipino market is where we should be. It's fantastic. Because we've seen an organization, we've acquired the organization. Everything is good. It's all signed and sealed. And then it comes to paying their people because that bank account has been shut off in the Philippines. And no one has really considered that in the part of the onboarding
Yep.
process of how, like, wow,
Yep.
poor old finance wake up, they've suddenly got another 150, 250 people that they've got to pay in the Philippines and no bank account in the Philippines.
Yeah.
How are we going to pay them? So,
Yeah.
so very often this is again where by adding and including the services of treasury services into payroll providers' portfolio of services has really help that client
That's right.
to deliver the services they need to grow into that new market, but without having to go, oh, crikey, finance haven't got, we're under pressure now. You can actually turn it on and turn it off very quickly. And that
Yeah.
is the key benefit to get people live. And this is why it's been so great working in this sector because it's constantly evolving and people's requirements. And as we were saying, the employer of record. Julie, you said about employing one person here, one contractor there, two contractors there. Normally, there's no way you even consider that.
Yeah.
Yeah.
Opening a bank account just to pay one employee is like, come on.
Yeah.
So it has been intriguing. Don't get me wrong; it's not always as smooth as I'm probably making out, but it is a lot easier than it has been in the past, and it is for corporates to get their network of bank accounts put in place.
Makes me laugh because if, I'm thinking about the number of times over the decades that someone has reached out to me and said, I've acquired a company who does payroll in Morocco, right?
Yep.
Or
Yep.
some But nobody ever says, "And how the heck do I even get the money in and out of
Yeah.
employees' bank accounts?" You know?
Absolutely.
It reminds me of AMS, Julie. It's like people forget that you need this extra thing, application management support,
Right,
right,
right.
for your cloud investment. A lot of folks think, "Oh, we'll just manage it in-house, no big deal." And then they
Set it up.
come to find, yeah, "Oh, wait, we need help." I think it's the same thing here, and I find that it's not just the payroll teams and the businesses that struggle with this being complicated. Even banks don't wanna touch this in a lot of ways. There's a lot of banks that partner and go get help because it is a pain, and it's just not core to their what they do as a business to begin with in a lot of ways. So not that banks don't move money, but some don't move it out of countries, right?
Exactly. And look, I'm not here to knock banks. As I said, we have to partner with banks to facilitate.
Yeah.
We're an aggregator of banking services, so we have to work with them. But the one thing I do know from working is that payroll payments, particularly, are not particularly the focus, or the high volumes of payments at low value is not something that less than
Yeah.
banks are
High
really
risk.
super enamored with. Yeah, the high risk, the time resource if they go wrong input compared to
Yeah.
the reward. It's the risk reward piece, and in a lot of cases, payroll payments certainly is a higher risk versus the reward, and I think that's
Yeah.
where we are filling the gap because again, local knowledge is so key. I mean, Judy, you were saying about how, I bought a company. How do I get the payroll providers? There's also, the compliance piece you have to consider about is once you've actually found a payroll provider in the country, is how do you pay them? How do you move the money to them compliantly? How do you move the money to the end employee? What
Yeah.
messaging and referencing is required for that particular country? Because, if you don't send that correctly, that payment's not going through. So I think working with a specialist organization like ourselves, or with any organization that specializes in payroll, is it also adds value to your operation, whether that's through your partner, your payroll provider partner. But there is that local knowledge that we've had to learn through the years and pick up that this is how it's got to be done. Otherwise, you're not going to get the payment through. And then
Yeah.
an irritated employee that's just been employed through an acquisition who's not been paid is not going to be a happy employee.
Right,
Yeah.
right. I have a question because I see a lot more mid-sized companies these days that are into cross-border operations. And many of the payroll providers used in those organizations aren't specifically in the business of doing things globally. And so what would you tell a company that is maybe a mid-sized company, doesn't happen to have a partner that is big into global payroll and therefore have a service to attach? What do they do? Do they look directly for this type of service and try to find it that way?
Yeah, absolutely. There are a number of ways. It's if they have a payroll provider that isn't assisting them, or doesn't have the facility to assist, or in some cases the interest to get involved with the treasury and the cash management, the money movement, etc. Absolutely. Do some investigation and look online, and put in your search engines, payroll payment specialist, payroll payment, global payments, etc. And then it will come up, and then it will should give you a good list of fintechs that are offering this service. And in some cases, it's not a bad thing to have that direct relationship as well, because sometimes payroll providers are happy, obviously, with the payroll. They'll calculate the tax, etc., and tell you how much, but they probably won't get involved in if you need to pay office rent, if you need to pay by sundries to support your business in that country. So by having a separate relationship with a payment specialist is also very useful for you, because you've got a belt and braces then. So if you decide that you want to continue making the payments yourself, but you've got that capability through a fintech who are able to deliver payments compliantly into the country you've just expanded into, because it's an exciting new market, then great. Or you can belt and brace it. Well, if you do have a payroll provider that is also able to deliver payments, great. Let them do the end to end through their chosen partner, payments partner. But then you also got that comfort to facilitate that you can make payments and invoice payments as well securely, without being sort of, again, having to have bank accounts in that country. And it just means that you can get operational a lot quicker. But so research is key, Julie. There are many organizations like ours that will welcome them with open arms if they've got
Yeah.
any questions,
Yeah.
Feels
because
like
it's,
feels like a different buyer in
yeah,
that
yeah,
case. It's
yeah.
probably much more the finance and treasury buyer as
We
opposed
we
to
have had a lot of experience, particularly from the States, where organizations that have grown to a fairly good size in the States are now looking to embark on their sort of first
Yep.
international
yeah.
expansion route. And it could be one country, two country. Some companies are literally dipping their toe just to test the market, and therefore they need to facilitate, and they need boots on the ground, localized knowledge. But again, there may only be two or three people. and maybe your payroll provider is not interested in facilitating, or they can't help to facilitate. So again, it's the same with payments. We have honestly some clients that have literally got one employee that are quite happy to
Yeah.
process through to
Yeah.
literally tens of thousands of employees. So again, do your homework, do a bit of research. There are organizations out there willing to help you.
Yeah. I love that this isn't a big company thing anymore. Any, the smaller guys can get in on it and they need to, right? I mean, I think
Yeah.
it's about, we've talked a lot about this, agility, growth, compliance, all these things. So, Andy, one of the words that I heard, I feel like I heard a lot in the last, I'd say 18 months. Interestingly, I was thinking about this morning, is optionality, right? Optionality, I think is something I hear coming up. And that's where I think the stable coin, Bitcoin, cryptocurrencies have kind of come into play. And I think it's exciting. I think stable coins are exciting. I think they were inevitable. They're here. More countries that we got over 130 countries now have some form of digital fiat. Certainly going to be very prevalent, I feel like, as we go forward. But what are you seeing on stable coins? What are your thoughts on that? And what are your thoughts on just this use case? Because I think it's a great win for health, wealth, and retirement, right? We talk about moving money in 401ks and different things like that as employees. But what about the businesses in terms of this optionality sort of theme?
Yeah, I think, cryptocurrency has been around a little while now. I think in terms of mainstream use of cryptocurrency up until the point where stable coins were introduced, i.e., it was linked to a fiat currency. And by fiat currency, I mean an actual physical currency, United States dollar, GBP, British pounds, euro zone, etc. When you're looking at something like a payroll, you can't. It's a gamble, to pay someone in Bitcoin because the
Oh
volatility of
yeah,
how much that moves. There's a compliance risk, and getting insurance of compliance on cryptocurrency is still tricky. Stable coins is making it a bit more mainstream in terms of the security. Now, security of funds is the key piece. And to this date, I think it's something like $208 billion has been moved via stable coins this year so far.
wow,
It's along that sort of level. But you're still going to have to rely. And the beauty about stable coins in a way is the technology behind it. I don't think you will ever step away from the fiat currencies. You will always need an off ramp, an on ramp, and off ramp in terms of banks. So I think what it's doing is enabling the speed of messaging to improve. So therefore, the payments can be made in some cases much quicker, and that data is moved a lot quicker. But also another area that we've seen interest in this is also in the more exotic currencies where
hmm,
your volatility is being removed by
yeah,
dealing in a stable coin because it's backed by USD or GBP, etc. So that volatility is removed. I don't think we'll ever find a case where like the Swift payment network that is used by the banks all over the world. I don't think we'll ever see that eradicated. I actually just think what will happen is technology will be combined within stablecoin technology that's used to move that to make that happen. Is also then combined with normal with the current banking networks that are around. So it's hopefully going to be the best of both worlds, where we can utilize technology, speed, efficiency,
yeah,
but combine that still with the compliance checks, the security the banks that are involved can deliver, because that's the key thing. It's the
yeah,
security and the risk. You still need to ensure that your people are paid compliantly, that you're reducing the risk for your business, and just for the sake of holding funds for a bit longer, that speed, is it worth the risk reward? So I
yeah.
think as time moves on, it's going to become more mainstream. Stablecoins become more mainstream, but I think it will work very coherently against the existing
Yeah,
networks that we've got as well. So you get, as
agreed.
I said, the best of both worlds.
Yeah, I think that optionality is key, though, that word, because I think that gives people the ability to decide what's the best thing for my situation in this use case, this moment, whatever, which is great. So,
Are there ways in which some of these advancements are actually minimizing FX risk or impact? So I know many times abroad, banks will accept and hold US dollar valued accounts and other sorts of things. Do you see any type of a long term impact or ability to impact FX risk by keeping things in a certain currency?
Yeah, I think we've already seen that in terms of people are now wanting to be paid, but in different formats and different ways. Wallets. A lot of people have now got access to multiple currency accounts. If you're a contractor, I know organizations where they work with contractors and you are organizations where they have contractors that are based in sometimes quite challenging countries, but they're super skilled. Yeah. But then
Hmm.
like Ukraine, for
Yeah.
example, at the moment, Ukraine is unfortunately going through a massive challenge in terms of keeping the economy going and getting people paid. And the skill set there is incredible. So therefore, a lot of those guys are now deciding to get paid in USD into wallets to therefore protect them against local fluctuations of currency. Also, access to liquidity in the local currencies as well. And then when you got rising inflation rates, et cetera, such as that all impacts. So I think anything to reduce that volatility to ensure that you hold on to as much of your hard-earned wages as possible is great. The access to organizations like ourselves, the access to FX, the liquidity in more volatile currencies is getting easier and greater. But also, I think the important thing to all of this is also the availability of data. Years and years ago, the access to data was not there. You can now get hold of a lot more data to help you make decisions. And then also, as I was saying, contractors, particularly, have got so many more options of how they get paid now,
Yeah.
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 which I think is a great thing. You know, there's a huge unbanked community out there. I mean, I spent many years living in Africa, and it was impossible for them to open a bank account because you couldn't, access to information to actually be able to open a bank account, birth certificates, et cetera, really
Yeah.
hard to come by. So therefore, it's given the unbanked the ability to have access and involvement in commerce. And that's a
Yeah.
Yeah.
fantastic thing,
It is.
So
Yeah.
I can only see that. I can only ever see that growing, um,
Yep.
which is great and exciting.
Yeah.
Yeah, I love what fintech is doing for, like we said, the liquidity for businesses, the optionality, and even for employees and workers and folks, right? You're getting the ability to access money, maybe in a different way than you might have. Right? We all don't have the same attachment to money, and I think it's leveling the playing field for a lot of people. But Andy, look, in all of this, one of the things I think we would be remiss not to talk about is compliance. Like a lot of things, right? Having a partner help you often leads to better maturity in that infrastructure element of this. And I think when you think about the optionality for workers and for businesses to settle things and pay things, there's a lot of opportunity for risk here. What's kind of the compliance slant on this, and what's going on there?
So compliance is really key. I'm really glad you brought this up, Pete, because people often overlook the compliance requirements, and it is vital. And I think for any company that is looking to expand or grow internationally, compliance should be up there in your top three considerations of how
Yeah,
you move money. Okay. When you're doing research, if you're looking for a new payments provider partner or you're looking for a global payroll provider, really drill into what are the compliance procedures, not for actually just onboarding them as an organization. What is the process of when you handle my payments and the data that you're managing? How are you doing that compliantly? So where is that data stored? Then actually to when it comes to making payments, what pre-validation and checks are you making? Because I
hmm,
don't know if my employees have got fat fingers and they're putting in the wrong codes. What validation? Because it happens. Or
oh
they've
yeah,
given you their they've
mine
given
mess
you their
things
old
up all the time.
yeah, or they've given you an old bank account that doesn't exist anymore, or things
Yeah,
like that. So, what pre-go live validation process have they got in place to test the data? And there's also by doing that testing, and it also highlights the potential to show up what are called any false positives in terms of compliance hits. Now, when we're making payments, we have to check every single payment as to where the money's come from that we've received and what the source of those funds were through to where the money's going to. Every single payment is checked against agency lists around the world of who's on the watch list, i.e., who's been naughty and shouldn't, and they've been watched. Um, so sometimes you get false positive because similarity of names, etc., are held up and flagged by having a pre-validation process in place that can actually then highlight those flags, those red flags before you go live. Doesn't 100% remove that potential, but it's more likely to highlight during the first test payment to them where a bank may hold the payment and go, hang on a second, that name, can you prove that person's identity? We need to ask for additional information like passport copies, etc., etc. By having all this compliance in place, it adds peace of mind to the organizations, and that's fantastic. But at the same time, when you're onboarding with any new company, any new payment provider, any new payroll provider, it's really key that you understand what that implementation process looks like and what the compliance procedures are to ensure you hit the scheduled timelines of the country rollouts and that you actually then help your employees, to get paid rather than it suddenly going, oh, we didn't think about testing payments. Okay. And all due respect again, it's a specialist service that you probably get from your normal bank, because they're
Yeah.
just, a payment's a payment, so it's unlikely they're going to do any of this type of pre-implementation work with you.
Andy, in
Yeah.
payroll
Yeah.
layman's terms, are we really talking about the penny test, that's been around forever?
Yep.
Yeah, very, very simply, it is the penny test. And it sounds really stupid, but to be honest with you, there's no better way than actually sussing out and locking
Yeah.
down data than actually trying to make a payment to it. And the beauty is also, from a security perspective, there's another piece of the penny test that you guys might not really understand why we do it as well. And the beauty is, it's once data has been made, once a payment's been made to a specific set of bank account details, and that goes through solid, that's locked down. We've tested the system, the networking. It's great. That data is then locked down in systems, so it cannot be altered, amended, etc. So from an internal controls, I can say sensitive data controls. Yeah, that also means that you are working with an organization and know that it's been locked down, it's good, it's completed, and it's now held. And we can't change that for 6 years. I mean, it's got to be, every transaction's been held, data's been held for 6 years. So there's a lot more to a penny test than just,
Yeah.
let's see if it works okay, and
Right.
let's see if those guys actually know their bank account details. There's actually, behind the scenes, there are also additional benefits which may not be completely, I can say, open to the client, but it actually
Yeah.
benefits the client.
Well,
Yeah.
I think it's crazy. There are definitely situations where folks that are bringing in a payroll software or payroll services are hearing, you don't really need to do a penny test. And perhaps that's because, the
Hmm.
services component isn't there, and it's presumed that whoever's dealing with the money movement will have to have that onus upon them, right?
I mean, look, in some countries, it's obviously a lot easier. If you're paying, into a more challenging country, let's put it that way, I would fully recommend a penny test. If you've got a large headcount, then fine. But you can do what a lot of companies do, is they select, all right, how many banks do all our employees bank with, and we'll send a selection of payments to each bank to test that, rather than doing a full, this 3,000 employee penny test. We don't need to do that. But if you are entering into, specifically through acquisition, you're suddenly working with 10 employees, 15 employees, I could not recommend penny testing more, because it actually then does also highlight any potential anomalies. If you're having to go through a correspondent network or banking chain, which sometimes you have to, you try and avoid that, but if you have to, you have to. And it also weeds out any potential issues for those correspondent banks, which also, it happens, issues,
Yeah.
So again, by doing that pre go live testing, that hopefully alleviate a lot of the problems you're going to have when you go to go live.
Maybe we'll call it
Yeah.
a nickel test because we don't do pennies anymore.
Yeah. No more pennies.
Yeah, I think
News
I think we should change the name of it, because I can't really, there's not many places I can think of that actually get a penny there to show up. But
Yeah.
yeah, you're absolutely right, Julie.
We're doing away with them
That's
here, right?
right.
I heard they're not gonna make them anymore. They weren't worth it. Yeah. No, interesting, interesting. Well, look, Andy, look, man, I got a couple more things here to wrap this up. But like the first one is, we're heading into 2026. There's already just some great momentum. And I'll tell everybody, listen, if you haven't poked around the fintech world, I've been just blessed to be around it, from the wellness side, from the money movement side, going to Money 2020. It is fascinating how fast fintech is moving, how it's just converging, I think, with absolutely everything we do in life, whether it's HR, whether it's our personal worlds. It's showing up literally everywhere, embedded into everything that we do. But Andy, what has you excited? What do you think we're going to see in 2026 as we go forward here?
I would say yes. The growth and the continued rollout and confidence in stablecoin is going to be one of them. Absolutely, I think there's going to be a massive increase in the use of that, because of the benefits it can give to organizations. So I do not see that declining. It's going to grow. Okay. I think the embedded piece that you mentioned is also going to be really hot in 2026. I
Yeah.
think the more and more the treasury systems, ERP systems, HCM systems, bank platforms, can talk to each other seamlessly and in real time, and with the use of AI that everyone's obviously seen in now growing and growing more and more, coming more mainstream in all of those the sort of devices, platforms. That is, I think, going to be the key piece. But I also think there's going to be a growth in the requirements for local payment networks. People actually opening up, facilitating, and having I hate using the word, but the local type
Yeah.
environment where you're still trading cross border, but you're moving money cross border, but you're facilitating that through a partner's local payment network.
Yep.
And the reason for that, I think, is to reduce cost. That's going to be it's going to 2026 is going to be a tough year, and I think to do anything to assist and reduce costs in operations is going to be very, very welcomed. And I also think there's going to be a bigger move into, and what we're seeing is a bigger move into the request for increased service provision,
Hmm.
i.e., in payments to statutory tax authorities, the social security, you name it. So that whole encompass of employing payments have now spread, and companies are now confident to go, right, I want to outsource everything to you. I want you
Yeah.
to everything to do with employment. I want to be able to outsource to you. And I've seen this grow. We've been asked more to deliver more in countries where jurisdictions make it super hard to actually pay taxes and social security,
Right.
believe it or not. So I think those are my sort of the 3 or 4 areas that I can see really growing. I also, to finish off, really, I think there's going to be a growth and demand for new markets,
Yeah.
for again a continued interest in expanding, whether it's by one employee, 2 employees, or through acquisitions, mergers and acquisitions, to
Yeah.
grow that market share and define new economies for you. And one of the areas we're seeing that is in Latin America
Yes.
is really becoming very, very hot in terms of places countries that are region to go to.
Yeah, absolutely. As we bring more manufacturing near shore, I think you're definitely seeing that. We've been seeing
Yeah,
it now for a while here, but yeah, and Julie, I don't know, but I've been poking around on this a little bit too. It's like the regional payroll play is back as well. A lot of the
yeah,
bigger companies are leaning into maybe regional
Mhm.
specialists and then normalizing to one global view, but fundamentally kind of kicking the tires at that regional level versus trying to necessarily get to one thing. So that tracks a bit here with what Andy's seeing on the treasury side. So yeah,
Yeah, what resonated the most out of some of those predictions, Andy, for me, is the increased service provisions. So there are so many pains. I'm assuming that means that when, in order to submit the taxes, you have to actually go into the various tax systems, and there's the equivalent pain of having somebody in finance or treasury move the money and put it into the bank account. Continues to happen on the tax side, and that's not that wouldn't surprise me at all. That's very painful.
yeah.
it really is. And yeah, governments don't make it easy to get paid.
Yeah.
I have no idea why they make it so difficult for people to pay their taxes. It really
I
is
know.
quite mind blowing. But hey, it's a challenge that is good. We have to overcome it, and we have to find a solution. Because again, as I was saying about all the integrated seamlessness of moving money, that challenge is put in front of us, and we're
Yeah.
working hard to find solutions for it.
Agreed. Agreed. So Andy, look, where can folks get in touch with you if they want to have some questions on cross border or just fundamentally to connect to your content?
Please feel free to check out. I've got LinkedIn. So Andy Valentine on LinkedIn is probably the best way to get hold of me. I've got my emails and telephone number there. So if they wanted to call me even, I'm quite happy to answer any questions. But it would be great to get questions. I love trying to assist people. And if they have got any specific challenges, you never know, we may have the answer for you. So please feel free to get in touch. So Andy
Yeah.
Valentine on LinkedIn.
Yeah. Always good to see you, my friend. And thank you for coming on the show and sharing your knowledge with us. And yeah, we appreciate you, man. Well, everyone, we'll be back soon. And yeah, thank you so much for spending the time with us.